Hello Dairy Today viewers, from the Stuart Peterson Advisory Team. Here's your Dairy Week in Review, recapping the week of May 4th, 2012. As always, we recap the trading week here on Friday by first taking a look at our key dairy components and how they did on the week. We'll first take a peek at our cheese market. As you see, blocks were unchanged for the week. We didn't see a whole lot of activity in that market this week, but switching to the barrels market, they did steal a spotlight, up 3.5 cents for the week. Actually were up higher for the week, but did trim some gains to finish by week's end, but once again finishing in at 147 mark. Butter did slide even further here, down 5 pennies for the week at 131. That is the lowest butter has been since going back to 2010, so continue to slide lower there for butter. Also looking at the powder market, not a whole lot of activity there. June whey was down 0.5 cents, finishing at 43.5, and June non-fat dry milk down 1/4. Also taking a look at the class 3 milk prices for the week, and as you can see, did see some very sharp losses, some very significant selling pressure across the board here. Only contract that was unscathed was that for a month contract. Now May's in that slot, up 22 cents for the week, so found some legs, got above that $15 price level, finishing at $15.10. And the second month contract, June, finishing at $14.08, above that $14 key support level. We'll get to that on the charts in just a second, but only down 12 cents, so it wasn't hit too hard. But further out than that, you can see very significant losses pretty much across the board here, July through October, down anywhere from 52 to 64 cents. Not too bad in November and December, down 34 cents for both those months. Now taking a closer look at that weekly black barrel average on the charts. We'll go and look at the weekly chart. So once again, each one of these candlesticks does represent a week's worth of trade. As you can see, where we finished here this week, edging up a little bit higher. Overall, very modest, nothing too exciting to speak of, but good to see it was a green week. And overall, just where we finished at, just above that 150 level, supportive as well. Once again, led by the block market, and also good to see the barrels playing a little bit of catch up as well. But overall, as we look back on the charts here, still remain in this very tight and sideways trading range. Really haven't broken out of it one way or another, except for a few exceptions. As you can see earlier in March where we spiked back, then the next week we reversed lower that same amount, then going back to early April where we did reach new lows for the year. But once again, overall consolidation around this 150 level, and good to see over the past 3 weeks we have drifted off this April low just below the 145 level. So as long as we can hold above that and work a little bit higher here, that is supportive. And our March highs around 160 cheese could be the next upside objective. We'll go ahead and stick on the charts and look at the June class 3 milk contract on a daily chart. And once again, this June contract is in that second month slot, so very important to keep a close eye on this contract. But before we look at this last week's trade, we'll go and look back on the charts a little bit further just to see this channel that we've been in since early April and this overall lower trend here. Very significant losses along the way, only a few, really a handful of up days, but really a sharp sell-off. You can see carving out new lows along the way. And once again, going back to last Friday, dipping new lows once again at $13.95, so dipping below that $14 price level. It was a little bit supportive that we did finish back above that 14 price level to finish the week. And we'll see how that carried over into this week's trade as well. So going to Monday of this week, up a little bit higher, really nothing too exciting there. But Tuesday did have a really sharp gains there, up 56 cents, so very good to see that. Haven't seen gains that high since going back for quite some time, so good to see that once again. Going into Wednesday, did give back some of those gains. Overall, pretty modest losses though. And then Thursday here, very sharp losses, giving back all the gains for the week. And Friday, pretty much unchanged here. And once again, just where we finished, down only 12 cents for June, so it turned out to be pretty much a wash. But once again, what we need to keep an eye on as we finish at 14.08 is the last week's lows running at 13.95 level. And as you can see, we almost traded there, only trading at 13.97, so about 2 pennies above that. So as we look forward to next week, keep an eye on that $13.95 to $14 price level. Earlier this week, USDA released the March dairy products report. So we're going to take a look at production for cheese, butter, and whey, and how it stacks up year over year, also month over month as well. So first, starting with the cheese market, production came in at 946 million pounds, and compared to last year, that was up about 3.7%. Compared to the previous month, the month of February, up even higher there, up about 10.3%. Also had gains in the butter market as well, coming in at 176 million pounds for production, and year over year, up 6.4%, month over month. Not quite as much there, up nearly 4% at 3.9. Dry whey was the only outlier here. Production coming in at 90.2 million pounds. Year over year, that's down about 4.3%, but month over month, just up about 1%. With the April contract coming off the board this week, really a good opportunity to look back on the year thus far and see where our class 3 milk prices have finished and have settled for January through April. So you can see those months represented here by the green columns. Once again, January through April of 2012. And in comparison, we'll look at these blue columns as well. And those are the 2011 settlement prices across the board, January through December. And also looking at the red columns, May through December, those are our 2012 futures prices, what the futures markets are pricing in May through December. But we'll start with our January milk price, where we came at for this year. Coming in at $17.05, way ahead of the schedule from 2011, which was around $13.50. So good to see we did start the year on a good note, but since then it has been downhill since then with year-over-year declines. February coming in at $16.06, just a little bit behind the previous year's schedule, but March really had a big gap there at $15.72. The previous March was up above $19, so once again really lagging there. And April, $15.72 as well. Also looking ahead, May through December, you could really see this gap between this year's futures price and last year's settlement price really starting to widen here between May, June, and July. Also into August as well. So once again, when we had that summer heat really eat into production, also coupled with the seasonal demand factor of the second half of the year, we did see some great prices last year, but this year really not seeing that premium built in the marketplace just quite yet. Not a lot of optimism out there, so you can see where our futures are pricing in. So we'll keep a close eye on that as we get into the second half of the year. And looking ahead to next week, a few things to make note of. The first one being, once again on that second month contract, key support is around that $13.95 to $14 price level, so keep an eye on that. Also with key reports out next week, on the demand side of the equation, the March dairy exports report will be out Thursday, May 10th. As always, thanks for watching. We'll see you next time.